Coming up on Your Money and Your Life, how to avoid cryptocurrency scams, tips to financially prepare to start a family, are people shopping around for better home loan interest rates, plus in Kochie's Budget Challenge, we help a Perth family whose pet bills have gone to the dogs. Hello and welcome to Your Money and Your Life, the show that's all about saving, spending, investing and enjoying your money. My mission is to make sure you make the very most of your money, that you're getting the very best deals on everything from home loans to credit cards to insurance and a whole lot more. Today, we're kicking off with Kochie's Budget Challenge. Every week, with the help of the team at Compare the Market, we show real families how to find better deals on their biggest bills and save potentially thousands of dollars. Let's meet Chelsea and Damien. Chelsea and Damien have a full house with their kids Scarlett and Caden and their beloved spoodle Chloe. Chelsea's brother and his family also moved in while Perth's housing market remains tight. We found $1,700 for Chelsea's mum Joanne in last week's budget challenge. Can we do better for her? Chelsea and Damien, thank you for having us. You've got a full house here, haven't you?
We do.
Who lives here?
So we've got my brother lives with us, his fiancée and her little one. And then we've also got 2 kids of ourselves.
Right, okay.
Yeah, and so 7 in total.
Right, so is that helping you balance the books, the budget?
Yes.
It's helping.
Having them on board is actually helping.
So you've all moved in sort of to help with the cost of living crisis that's going at the moment?
That's right. It's helped both of us. It's helped us with our bills and all that, and living cost, and it also helps them because there is a shortage of rentals and out there.
What are the big pain points? What are you feeling the most?
Mortgage, we just came out of our fixed rate in April, and
So you came off the mortgage cliff?
Yeah, we came off the mortgage cliff. So
How was that?
It was an eye-opener. Yeah, you don't realise, how much it was saved us back then to now.
Yep.
So you've got to try and budget that in, which you never used to.
Yeah.
So all the increases of, your electricity, your gas and everything else is going up. Your wage is not going up as much as everything else. So it does get a bit tough.
So apart from the mortgage, what other costs have you found going up that have surprised you?
Probably daycare. Daycare's gone up a bit. But electricity.
General food.
Food as well. Especially of a household of 7, how much it does catch you out.
What have you had to sacrifice?
Well, in general, you probably want to go on holidays or things like that. You can't save up. Even your savings account, that you can't put too much in your savings account these days just to make ends meet to get through the days.
Yeah.
And so one day I would like to probably get a second car for myself. Thankfully, my parents have actually lent us a car.
Right.
So, but yeah, one day we'll get another car and the other one is probably moving.
Damien, are you on board with that?
I'm on board for moving. Just got to figure out where.
Perth property prices have gone so well. Even though the cost of living is really hitting hard, at least your asset is going up, isn't it? Like
That's
many
right.
Australians, we're asset rich and cash poor at the moment.
Yeah.
Because you can't eat your house and your house doesn't pay for daycare, does it?
That's true.
So the goal is to get another car.
Probably my main goal is probably moving.
All right,
next
that's a
year or so.
big goal.
Yeah.
So let's see if we can find some savings in the bills
Yep.
towards that goal.
Yep.
All right?
Sure. No,
You've
cool.
set us a challenge. Let's sit down and see what we can do.
Fantastic.
Yeah, sounds good.
Would you believe Australians lose more money to investment scams than any other type of scam? Last year alone, Aussies lost $1.3 billion because of them. It's an issue I'm passionate about, as cryptocurrency scammers have illegally used my photo and fake stories about me on social media to lure people in and trick them out of their money. I've been devastated to hear of hard-working Aussies losing thousands of dollars to these scams. So here's how you can avoid falling victim to a financial scam. 1. Never share your personal or financial details online or over the phone if you're unsure. That includes your bank details or tax file number. Number 2, review your security and privacy details on social media, and be careful with your passwords. Set up two-factor authentication where possible. 3, beware of unusual methods of payment. Some scammers like to ask for payment in cryptocurrencies like Bitcoin or gift cards to avoid financial authorities. 4, check for clues of authenticity in emails, such as constant spelling errors and generic greetings. And finally, don't click on any suspicious links. After the break, how higher interest rates are impacting your mortgage repayments. Welcome back to Your Money and Your Life. Well, just over half of all Australians have investments in addition to their home and super. On average, Aussie shares return around 10% a year over the longer term. But stability is a key priority for investors, with 2/3 of respondents in a recent ASX investor study wanting stable or guaranteed returns. Pretty tough in the share market. So what are some of the best stocks to add to your portfolio and hold on to for the longer term? Sort of set and forget stocks. To find out more, I'm joined by Mark Gardner, Chief Executive of MPC Markets. Mark, guaranteed and share market don't really go together, do they?
No, probably not. No, but you can try and get as close as possible, I suppose.
And think long term, because long term, and not panicking when there's a short, sharp downturn, you do get pretty consistent returns.
Sometimes reading the financial review every day is, not the best thing in the world because you sort of get swept away in the panic. We're very big on planning with our clients in terms of forward planning and not being reactive. Obviously, the markets will fluctuate. And we are coming into a period where there's likely a global slowdown, which usually ends up being, say, around about a 20% pullback in some of the major sectors like financials and consumer discretionary and things. Instead of trying to time the market, people are busy, they've got jobs, they've got kids. Having that set and forget and not having to worry about it overall is a real key demand from quite a few of the clients we have.
So run through, give us a couple of stocks that past performance, which is no sort of forecast of future performance, but have a long proven track record of just delivering decent returns.
Probably be a little bit boring here, but BHP's obviously one of them. More so for the fact that, BHP's got a strong track record, particularly in the last sort of 10 to 15 years, but I think their forward projects in potash, which is fertiliser and food, copper for electrifying, for AI and electric vehicles and the energy transition are going to be very, very solid thematics over the coming years.
So BHP.
Macquarie Bank, which is the best return on equity bank in Australia. The Big Four get all the headlines because they pay dividends, but if you'd invested in Macquarie 10 years ago, you'd be far, far better off than even in CBA.
Even better than Commonwealth Bank?
Oh, absolutely, yeah.
Wow.
So I think more around a 19% return on equity versus about a 14. So,
okay.
And last one is a little bit left field would be Xero for a little bit of growth, which is the accounting software for small businesses. We just really like the pricing power of the business. Obviously, it's very scalable. They're going into the US, and it's just something people need. There are other options if you're a little bit younger for growth, say maybe Judo Bank or Judo Holdings in the financial sector, because it's very rare you get an opportunity to get into the banking sector in Australia, at early stage, whereas obviously the Big Four are very established. Or something like WiseTech, which has been incredibly consistent performer over the last, couple of decades, really, 30 years almost.
In terms of if they're going to give you good, consistent returns, timing to get into them isn't as much of a factor. It's just being there, isn't it?
Time in the market, realistically, I think if you combine that with a bit of dollar averaging, you don't have to put all of your money in straight away.
Good point.
You can just basically set aside some every quarter or every month and just buy on a regular basis. I think that's the best way for an investor that doesn't want to watch the market closely to get the best result for them, because if you do happen to buy the absolute high, there are consequences and you're not going to get those returns. But if you just set up a reminder in your calendar and just incrementally just start putting in money consistently over time, compound interest is, a very powerful thing. So that's probably the best way to approach it if you're short on time.
All right. Mark Gardner, great advice as usual. Thanks very much for joining us.
Thank you.
Good to see you. In this week's Word on the Street, we asked you how higher interest rates have affected your mortgage repayments, and have you tried to get a better deal?
The interest rates have affected my mortgage repayments a lot. They've gone up heaps, almost double. maybe even more than double.
The payment we make now used to be $5,000 a month, and now it's just below $9,000 a month.
I think it is important to think about the real effects that's having on a range of people.
Not being able to afford things that we used to. Everything's gone up, but the interest rates make a huge deal.
I refinanced recently, and as a part of that, I tried to make sure I was getting the lowest rate.
No, I haven't refinanced at our loan in, I think years.
I haven't begun to look very intensely, but I just had a chat with a mortgage broker a friend recommended, and I did find it a little disheartening. I'm a single income that's quite stable, and yet I was told that my income is just too low.
Eventually, I will. Eventually, I know I should get onto it. When I have time, I need to go and look at other banks who can do us a better deal.
Very hard to pay off, and I hope it ends soon.
After the break, we find out how you can set up your finances to start a family. Welcome back to Your Money and Your Life. Now, starting a family is an exciting time for any prospective parents, but there are a lot of things to consider, especially when it comes to your finances. Nursery equipment, healthcare and childcare costs are just the tip of the iceberg when it comes to expenses you need to think about. So how can you prepare financially to start a family? For more, I'm joined by financial coach Betsy Westcott, who's just had her second child. So not only does she know the financial part, she knows everything else about it as well. Betsy, do we want to know the figure of how much it costs for a child?
Well, it varies a lot, and it is a little bit staggering, I must admit.
Yep.
But depending on your location and lifestyle, that'll really influence how much raising a family costs. But some research from the University of Canberra suggests it's anywhere between $497,000 to over $1,098,000 per child. So if you put that on a per annum basis, that's over 18 years, assuming they leave home after 18 years. So that's $13,000 to $30,000 a year. So that's going to ebb and flow depending on your age and stage. But one thing's for sure, those kids aren't cheap.
No, exactly. So you're thinking of starting a family. How do you start preparing financially for?
Well, before you conceive, it's a really good idea to get your insurances in place. You're going to get a cheaper policy and more things included in your insurance. So your health insurance, if you want that private maternal care, or
because you'll have wait times if you decide to go from, say, silver to gold, won't you? So you've got to factor that in.
Absolutely. And then there's things like your income protection, life insurance, making sure that those have an appropriate level of cover is really important as well. Once you're on your way to starting that family, then really getting cozy with your budget, because some expenses will go down, like, you know, the holidays overseas and the eating out, but a lot of them are going to increase. So getting really clear on what that's going to cost and making a bit of a plan, buying those baby goods, like you said, or the medical expenses, and then starting to plan for the ongoing costs like education and childcare, which we know is also very expensive.
Yeah. Also checking your parental leave with your boss, important.
Very important. So most workplaces will offer a paid parental leave, and so finding out what that is, how much, for how long is really important, particularly when setting that budget. But also looking into what transition back to work programs they might have, because a lot of companies are offering support in helping parents come back to work. It's no small feat. Now, if you're not eligible for paid parental leave through work, then you can look at the government paid parental leave, which offers up to 26 weeks, depending on when your baby was born, which can be shared across both parents, and that can make a big difference. There's also additional payments that you might be eligible for, like the newborn payment, parental payment, family tax benefits. So check them out with Services Australia.
And impact on superannuation as well.
Well, for a lot of parents, particularly women, they take time out of the workforce, or they may return to the workforce but only work part-time. So they're earning less money, and that means there's less money being contributed to super, which means you have less money to fund your retirement. It could be the difference between cruising Parramatta River and cruising the Mediterranean with your besties. So being mindful of the impact that that's having and looking for ways to boost it, whether that's a spousal contribution, a government co-contribution, or just making extra contributions whenever you find that precious spare cash.
It seems daunting, but we all seem to get by it, and the kids are priceless, aren't
They're
they?
a joy. They're lots of fun. Couldn't recommend it more, but it is humbling some days.
Sure is. Betsy, good to see you. Thank you for that. After the break, we return to Kochie's budget challenge and see how Chelsea and Damien could save on pet bills and a whole lot more. Welcome back to Your Money and Your Life. Let's return to Chelsea, Damien, and a dog that lives a very expensive lifestyle, Chloe. We've gone through their bills with the experts that compare the market, and here's what we found. All right, Chelsea and Damien, we've been through your bills. Let's see if we can put some money towards that second car and easing some of the cost of living pressures. Now, remember, these are just thought starters for you to consider. Let's start with the home loan. You've got it split across 3 different loans with different lenders. Why?
When we first signed up with the mortgage, they did a bigger loan for a fixed rate, and then the second one for a little bit smaller. And then the third one came along when we got our pool.
They're actually pretty good rates. Fixed rates have dropped a bit over the last 12 months. You could get rates around 5.5% to 5.75% at the moment.
Oh, wow.
Take that into consideration when you're looking at refinancing those loans. But remember also that if you're on a fixed rate, if there's a cut in official rates, variable rates come down and fixed rates stay the same.
Yeah.
So you might lose out depending where you think interest rates will go. Now, we love Chloe, and it's great you've got pet insurance as well. Did you know your premiums have gone up 40% over the last 2 years?
No.
40%.
40%.
40.
Wow.
Wow.
We couldn't believe it. You're now forking out $727 annually.
Wow.
But if I told you you could get even more value with a different insurer and for a smaller price tag, what would you think? We found an insurer that increased your current annual benefit limit by $5,000 and still came in around $220 less.
Oh, wow.
Over the year.
Shows you.
So she's pretty expensive at the moment. You love her dearly. And of course you can't put a price on love with your
No, you
pets and
can't.
things. Let's make that very clear. But that, if you changed insurers, that would leave you with an annual benefit limit of $30,000. So there's more you could claim on Chloe and really make a bit of a saving on the premiums. And we all know how astronomical vet bills are at the moment.
Yes.
So if she eats a piece of Lego, you know, that operation is very costly. So that's a good saving with the pet insurance.
Definitely.
Okay.
Buy now, pay later transactions. Chelsea, look at the expression on your face. I know, they're convenient. They seem pretty good at the time.
Yeah.
But just understand they are another line of credit.
Yeah.
Okay, and you may be incurring fees or find yourself in more debt to cover the payments or the administration fees. And my view is never use buy now, pay later. Get on top of them, clear it. Really important because it's very expensive debt almost by stealth.
Yeah.
And it's so convenient. So that should be a really big sort of focus for you.
Is that also a negative against if you go for a home loan or something like that with the bank fees?
It can go on your credit report. You can get free credit ratings on Compare the Market website. You can go and get a free credit rating just to see where you stand if you need any more credit in the future. So all in all, you've got some big decisions to make on the home loan. There could be big savings there in the future, but the ones that we can clarify, it's a few $100s in terms of savings on your bills. Buy now, pay later, getting on top of that and wiping it out is really important. So Compare the Market have decided to help with that, with the $1,000 to get on top of buy now, pay later, to get rid of that, to save the expense.
Oh, wow. Thank you so much.
Glad we could be of help, and thanks for having us.
Thank you so much.
Thank you. Well.
I hope you picked up some great handy tips from Chelsea and Damien's story to help with your household budget. Well, that's it for today. I hope you've enjoyed this episode of Your Money and Your Life. For all the latest money and investment news you need to know, go to ymyl.com.au. While you're there, subscribe to my free email newsletter, which is delivered to your inbox every Friday. Thanks for joining us. Next week on Your Money and Your Life, we find out how you can invest through exchange-traded funds, a government scheme helping first home buyers, and in Kochie's Budget Challenge, we travel to Adelaide to help a young couple save on their bills as their family expands.